Meantime, the tech sector likely to be sensitive to tomorrow's Fed decision on rates. Joining us right now is Doug Clinton, Intelligent Alpha founder and CEO. Good morning to you. Help us understand what you think is going to happen tomorrow, and let's talk about the impact.
Seems like, Andrew, the odds are going toward a rate cut. As it pertains to tech, where I spend most of my time, I think it's actually mostly irrelevant in the medium to longer term what the Fed does tomorrow. The focus in the technology sector, I think it continues to remain on the AI trade, obviously. And I think one of the things going into 2026 that investors are starting to think about is software. Software as a category had a terrible 2025. If you look at the IGV, the largest software ETF, it's down about 9%, or sorry, it's up 9% year to date, QQQ up 22%. So software just hasn't benefited from AI yet. I think next year that story could shift. One of the names that we own at Intelligent Alpha, where we use AI to do our stock picking, is Adobe. I think it's a name that obviously it's cheap. It's been beaten up for a while. Trades about 14 times next year's earnings, which is a 10-year trough. I think names like that ultimately have durable user bases and could benefit from AI agents using their technology over time. Those are the kinds of software names you want to investigate.
Where are you on the sort of AI bubble question right now?
Bubble is a tricky question because I think oftentimes when people say bubble, they're implying that we're nearing sort of an end. And I don't think we're nearing an end. I think we still probably have 2 to 4 years left in this AI bull market that we're living in. I think we're certainly inflating something. And the nature of technologically driven booms sort of invites bubbles to happen. They're actually part of why we get these booms, in my opinion, because you get this supposed excess capital. What it really does is it subsidizes the ability for new companies to offer technology to very large user bases like an OpenAI, who has almost 1 billion users now. And these bubbles allow for those sort of technologies to really break out. And so the direct answer to your question is, I don't think we're near a bubble burst. I think we still have a few years left. But I think certainly a bubble is something we'll be paying attention to for most of those few years.
If you don't get a rate cut, what happens to the market?
I think the knee-jerk reaction probably is negative, since that's what's priced in right now. I think obviously we've been sort of trained in the market for the last 5, 6 years to be sensitive to Fed activity. When the Fed's cutting rates, you want to own stocks. In 2022, when we had the Fed raising rates, obviously you wanted to sell stocks, and that's exactly what happened. So I think the knee-jerk reaction in the short term is probably negative. From my perspective, though, I think you want to stay involved in tech for the exact reasons we just talked about. I think we continue to have a very large tailwind behind us in terms of AI. We will have continued investment on the infrastructure side. We continue to see demand outstrip supply. So I think the narrative's still strong, regardless of what the Fed does.